Hello and welcome back to Green Money Momentum, where we talk about market movements, making money, and money momentum. I'm your host, Trevor, and we are here for Thursday's daily talk of stock. And as we could see by the heat map here on screen, we did have a mixed bag. So we did have some green, but mainly red. So more of a bloody day overall. To be exact, 68% in the losing category. And that was just because we do have some concerns because of the numbers that came from inflation today with the producer price index. And the reason why this is a concern is because we do know that the markets have been lingering on the decision from Jerome Powell and the Federal Reserve to cut rates. And so, just like I was talking about earlier this week, if any shockwave comes, this could be a little bit of a sell-off for the markets. And that's really what happened today. Just some fear around the Federal Reserve and if they will still cut after getting the numbers today, because we do know that Jerome Powell and the Federal Reserve have been remaining data dependent. And if anything changes in the numbers around inflation, if we get any bad data or some type of shockwave, if the Federal Reserve doesn't cut, that is going to be huge, because that's really what the markets are anticipating. So I saw some bears online talking about this. They were talking about how possibly it's like the carrot being dangled above investors' heads. And right now, investors are buying before everything drops from the Federal Reserve not cutting rates. But personally, I believe that the Federal Reserve will cut rates. There's been a lot of pressure on them this year from the president, and also a lot of investors and Americans are upset, really wanting borrowing costs to come down, especially around the housing market. But some difficult decisions to be made. Myself, I am staying bullish on the markets, and we are still a long way away from September. So before any shockwave possibly does come into the markets, I do believe there will be some more time. And I do believe that when that meeting does come up next month, that we will see a rate cut on the markets. And just think about the Wall Street psychology of a market cycle and where we are currently at. So on the picture here, it has hope circled, but that's not me who circled it. I believe that we are still in that belief to thrill stage. I don't believe that we have quite got to euphoria yet, and the euphoria will come right before that meeting happens, and then it really depends on what happens after that meeting. But a lot of possibilities within that meeting, and just talking about that carrot being dangled above the head and those bears talking about how pigs will be slaughtered. Well, I believe that even if the rate cut does, either way, whether the rate cut happens or not, I believe that the markets will continue to push up long term, because all year long we haven't seen a rate cut. So if a rate cut doesn't come, I believe it'll be a little bit of a shockwave for the markets, but it will just present a buying opportunity, as it always does. And if rates do get cut, I believe that the markets will soar. There is also the possibility that as soon as they get cut, there is going to be where investors are selling the news. Well, even if that happens and we see a drop off, the markets will push back up. So the markets have been very bullish through this year. And I always look past the short-term fear, uncertainty, and doubt, because moments do happen like today, but really I see them as just buying opportunities. So we're just going to talk about two stocks today. But man, there's so many opportunities to get in for some momentum and some really great dips today. So a very exciting day in the markets. Personally, I like when things are red because they present a lot of buying opportunities, especially in the options market. So when things drop really hard, you could get some great contracts on these dips. So definitely look around the markets. And if you have any extra capital, you may want to look at certain plays to invest into. And also, talking about our president, he has done something historic again. So we know that the president's promises when he was on his campaign before he started as president was no tax on tips, no taxes on Social Security, and no taxes on overtime. He has made this possible, and he has fulfilled his promises with the big, beautiful bill. And then today, he did cut more red tape around Social Security, taking away taxes for Social Security. So that is massive. This does free up even more capital. Now, instead of paying taxes on the money, the grandma could either give her grandson some cash or throw that right into the market. So congratulations on President Trump for doing that. Because of that, we're going to talk about his stock today, and then we're also going to talk about BigBearAI. So we're going to start out first with Big Bear, and then we are going to get into DJT, Trump Media, and Technology Group. As always, this is not financial advice. I always recommend doing your own due diligence before making any financial decisions. So starting out with the technical analysis on the Big Bear. Right now, Big Bear is sitting at a very unpredictable spot, really. So leading up into the earnings, we were in this consolidation zone for some time, and then we did have their big earnings on Monday, and the Big Bear announced some big losses. So their earnings per share was very negative. They also came in with a very weak revenue, and they also did talk about how their Army contract that they gathered earlier this year has been revised down also. So not making as much money as was initially announced. And this company also did withdraw their adjusted EBITDA numbers for the rest of the year. So their adjusted earnings before interest, taxes, depreciation, and amortization. This is huge. Wall Street never likes to see that. Wall Street really does look at EBITDA, and that is how a lot of big investors really base their investments, whether they want to invest or not. Wall Street is always future looking. Wall Street always wants to see improving quarterlies, and they want to see a good story for the future. So Big Bear withdrawing that is kind of a bad sign. And when we just look at the technical analysis, things do appear to be triple topping. And when we look at the relative strength index and the MACD, we do appear to be bleeding there also. And I say this not to put fear into any investors. Myself, I love the Big Bear, and I am very bullish on the Big Bear for the long term. And so with Big Bear, I have a lot of leaps for the future, but in the short term, I am not throwing out the possibility that we see some similar movements to what we saw in February. But this could present a beautiful opportunity to take profits if you are feeling nervous. So don't get caught in a position where you may lose all your profits, because we could again be seeing this triple top in the Big Bear. But that is not to be negative in the Big Bear, because if it does continue to drop, this will be a great buying opportunity. And again, I have a lot of leaps for the future, and I still hold those positions, but I did add to those positions before the big rip up in February and then after the dip. So if there is another big dip, I know me, I'll be adding to Big Bear again right around the low 4s or the high 3s if it does get to that point. And I could possibly be eating crow on Big Bear. There is the chance that we do just have another very bullish day in the markets. Macros look good, and Big Bear, being such a volatile stock, has a rip right back to this level of consolidation. That is a possibility, but over the short term, I do know that we could also see a drop. So as investors, we need to remember that the markets are a marathon and not a race. So what I'm saying is, if you're over leveraged on the Big Bear, you think you have too big of a position, possibly plan on thinning it down and taking some profits, because again, what we have seen with technical analysis really has been ugly. But this is where just always position yourself correctly, because I am still bullish on the Big Bear. And the other scenario with the Big Bear that is very bullish is if all of a sudden they come out and get a big government contract that will basically change the entire life of the Big Bear, and we could see a massive rip up, because also with their quarterly earnings, although there was a lot of bad in it, one thing that was very positive is this company has their strongest cash position ever. The first time the company has ever had more cash than debt. So things on their balance sheet are looking very strong. And again, when we just talk about what this company provides, the actual utility, they really do provide a lot. They are a government company. They are all at the airports, and then they have these huge contracts with the government as well. So they have the chance to gain a lot more. And at any time with the Big Bear, we could see a massive rip up if some type of big contract comes out. But over the short term, things are looking unpredictable, and sometimes the markets have a way to play with us because things will take longer than us investors hope. And so we have seen the big drawdown recently in Big Bear. We did see some short covering 2 days ago, and the stock has been pretty flat over the last 2 days, again sitting at this level that was previously support in the Big Bear. So a very interesting spot to be at. I'd love to hear what everyone else thinks in the comments section below. So let me know if you are still in your Big Bear position, if you sold out or thinned down your position, or if you added to the most recent dip, because Big Bear still at a price under $10, I still think is a great buying opportunity. It just really depends on your time horizon. And again, not to sound like a bear, but I do believe that it will come back down a little bit, presenting more of a good buying opportunity. But we never know. The markets could really go either way. And so with that, now we're going to talk about our second stock for the day, DJT, Trump Media and Technology Group. And DJT has had a pretty rough year, but it does present a great buying opportunity. And just to the levels where we were at the early part of the year, where we are currently sitting at 1750, presents a double opportunity. So a opportunity to have a 100% return on investment, because for a long while we sat at these elevated levels around $30. So right around 29 to around 47. That was the highest peak that we saw in the short term. So we could get there easily some point in the future, because back then DJT hadn't yet developed into the company that it is now. So as we know, Trump Media and Technology Group is still more of a new company. And in this last year, while Trump has been president, they really have set up a lot with this company. So we've seen a lot of growth around their Truth platform. But the thing that is even bigger than that is everything they have done around cryptocurrency, including big crypto ETFs. And then also most recently, their massive investment into Bitcoin, more than $2 billion, really following the micro strategy of having a big Bitcoin reserve, adding that to the balance sheet. So DJT's balance sheet is looking strong. And when we just look at the technical analysis, right now we really are sitting at the basement of this stock. It's been bouncing at these low levels, looking pretty low on the relative strength index, and it does appear that we have a lot higher to ride on the MACD also. And just like I was talking about with Big Bear and how I position myself at great buying opportunities, I initially bought into DJT with shares right before all the hype started. So right around the $12 to $13 mark last September. And it's crazy to think that we are basically back at that spot. So right now, while it's still low, I think is a great opportunity to pick up your DJT when it is worth less than a $20 bill. And it's not just me who thinks that it is a great opportunity, but a lot of big institutions have also added to their DJT position in the last quarter. So just as we could see right here, we have this big securities firm, they added. We had Hudson Bay Capital Management, they added. And then the big numbers added here. So UBS Group added 198% to their position. And then the biggest company out of all of them, BlackRock, added 21% to their position, taking their position to an estimated 14 million. We also had Goldman Sachs add 608,000 shares also. We did see some other groups remove some shares, but those are a lot of big players that added to their DJT position. And it's not just the big firms that are in DJT. We've talked about this before, but we also have a lot of politicians in Trump Media and Technology Group. Also, the Trump family holds a lot of this stock, and then also some big names such as Linda McMahon, Kash Patel, and other politicians. So there's a lot of big money that is behind DJT, and this stock has been very heavily manipulated in the past, but in just the last quarter, these big firms are adding to their position. And when we just talk about technical analysis and the chart's history, things really are at a low, and this company has added so much to their balance sheet and everything that they are doing around crypto and fintech. So with DJT, I believe in it because of the intrinsic value, everything this company is doing. But of course, a lot of investors really do look at this as just a meme stock opportunity. When we look at the past in this company, some of the times it ripped the hardest was when Trump got shot in the ear, and then also right before the elections, and then leading up into the inauguration. There was a lot of heavy manipulation around that time also, but that really just shows that a lot of investors look at this as a meme stock. And I believe that sometime coming up, maybe next September, when the rate cut does come and markets get very stimulative, that investors will once again look at DJT as a meme stock, and we could really rip through a lot of these levels of support and resistances in the 20s, in the 30s, and even possibly all the way up back to 45. And again, this company to me has a lot of strong fundamentals. They have really built their company over the last year. They're doing a lot around cryptocurrency. I believe when that rip comes the next time, that it will be a massive volatile rip, and it will be very hard to catch. And when that does happen, I do also believe that DJT will stick at some elevated levels for a long time also, because if we're just talking about the general market in the last year, DJT, the stock, has had a pretty hard time, which is pretty crazy because, again, just as a meme stock, a lot look at this as one because of DJT, but meme season hasn't really kicked off completely. But I look at this as more than just a meme stock. I am invested for the long term, and because of everything that they are doing around fintech and cryptocurrency. But I would love to hear what everyone else thinks in the comments section below. So please drop a comment. Let me know if you are invested into the Big Bear or DJT or any other plays, because again, today was a nice dip, and I love dips because anytime it is red, I know that I am usually safer to buy the dip than to buy when it is on a rip. And I do believe that the markets will continue to rip. But again, that's just my opinion, never financial advice. So please let me know what you think. Also, please leave a like and please subscribe to the channel if you haven't already done so. As always, I appreciate you guys so much, and I will see you in tomorrow's daily talk of stock.